Guys, Joel Franklin, market analyst for YouTrading, and in today's video, we're going to be talking about some of the moves we've been seeing in markets recently and what we're expecting for the week ahead. So let's just quickly run through the charts here. You can see this is the dollar index on one-day candlesticks. Continues to hold below its 21-day moving average, just above recent lows, but sort of still well within recent ranges. And this is quite a theme that we're going to see across quite a few different asset classes. Things have been very, very range bound recently. And I very much expect that in the next 2 days, at least anyway, today and tomorrow, it's going to remain the same because look at this calendar here. Nothing of any importance today. I mean, it's actually like a bank holiday in like the UK, but in other markets, nothing important either. Nothing on Tuesday. And things aren't going to spring to life until Wednesday when we get the CPI numbers out of the US, which, of course, most important numbers of the week. Then Bank of England meeting on Thursday, where they're expected to raise interest rates by 25 basis points, followed by US PPI. Obviously, that's important as well, but not as important as the CPI. The UK GDP on Friday, US University of Michigan Consumer Sentiment survey with that inflation expectations component as well, and a couple of Fed speakers, like a smattering of Fed speakers throughout the week to be keeping an eye on. But yeah, things aren't going to be picking up until Wednesday, so we've got 2 days of quiet. So very much expect the Dixie to remain within these recent ranges. Same story. Let's have a look at stocks within recent ranges. You can see here we failed to get above the or hold in the upper 4,100s. But we've also consistently rebounded from any tests of the mid 4,000s, sort of pivoting either side of the 21-day moving average as we hold above the 50-day moving average for now. That's expected to continue, ahead of these key data releases later in the week. Nasdaq doing a little bit better, hovering just above highs for the year that it hit last Friday. Yields within recent ranges, as is the case with a lot of these other asset classes, although this range has actually been going on for a little bit longer, more than a month actually, nearly 2 months, this sort of 50 basis point range, you could say, for the 2-year, and similar for the 10-year, US 10-year. There we go. In about a 50 basis point range as well, between about 3.3 and about 3.65. Maybe not 50 basis point range then, more like 30-40 basis point range. What else we got? Gold pulling back a little bit from the test of all-time highs. Well, we didn't quite test it, did we? But we came close to testing the all-time highs last week. Everything in wait and see mode, really, ahead of the data we're getting out later this week. Oil, seen a bit of a rebound. Things perhaps got a little bit oversold last week. We went below 70 per barrel for front month WTI futures. Now we're back in the 73 area. That's probably about right. Let's see how the US data goes pretty much. But it does look as though the downtrend in oil, which has pretty much been in play, wow, for, more than a year now. Well, not more than a year, but since last June, this gradual downtrend probably set to continue for now, you would imagine, if we are headed towards a recession in the US and in other key markets. What other asset classes? Take a look at Bitcoin, maybe. Selling off a little bit. Things got a little bit choppy over the weekend, but, still way up on the year. So the Bitcoin bulls shouldn't be panicking too much, although, the risk of a short-term correction back to this area here. Now we're below the 50-day moving average anyway, which could potentially trigger some technical selling. I think that there is a risk of a pull down to this 100-day moving average slash 25,200 sort of resistance area. Then that might be a not good opportunity for the longer term Bitcoin bulls to get back in. But yeah, guys, that's pretty much what's happening in the market so far. Not really much in way of news. We're watching some earnings, which, if we just go to this Reuters article, there are a couple of sort of smaller companies that people tend to watch, like Tyson Foods, for example. They dropped 12% after posting a surprise loss, but I mean, we're clutching at straws here because these stocks don't really tend to influence market sentiment too much. More important, though, obviously, the situation with the regional banks. Um, and actually, look at this: PacWest Bancorp jumped 20% after cutting its quarterly dividend to boost its capitalization, basically. So I guess that's a good sign for the stability of its balance sheet. So you've seen a few others that have been struggling recently, like Western Alliance Bancorp, Zions Bancorp. They're up a little bit. But this bank crisis is still going to be a steady burner in the background. And the final thing that we should be watching, aside from earnings, regional banks, and data, is um, this debt ceiling debacle, which continues to rumble on in the background. Um, we've got the US government Treasury Secretary Yellen talking about how the government could default by the 1st of June if nothing is done to raise that debt ceiling. Um, I mean, you'd expect that they are going to get this sorted because they always do. And this has happened dozens and dozens and dozens of times in the last few decades. This impasse, impasse at the last minute over raising the debt ceiling always seems to get resolved. But it can trigger a bit of jitters in the market. So just something that's worth monitoring. But yeah, guys, that's pretty much everything for this video. I hope you all found it enjoyable. Hope you all found it informative, and I will see you all in the next one.